Hello, my name is Jason Barikmoa and you are welcome to today's class on agricultural science. Our theme for today is produce packaging and marketing, and our topic for today is records and bookkeeping part 2, bookkeeping. Recall in our previous class, we talked about different types of farm record, and in our lesson for today, we'll be focusing on bookkeeping. By the end of the lesson today, you should be able to define bookkeeping, identify source documents, and describe how to prepare sales and purchase journals. In every business, be it big business establishments, organizations, boutiques, and shops, they carry out different forms of financial transaction. They do this either to pay their workers, buy things, pay for levies and dues, and so on. They keep account of these financial transactions as a way of checking and monitoring the money spent on their businesses. Farmers and agribusiness owners also carry out different financial transactions in their farms. Now, some of these financial transactions may include payments of workers and purchases of items needed in their farms. Now, the act of keeping record of all these financial transactions is called bookkeeping. Bookkeeping is the act of keeping record of all financial transactions taking place in a business, such as agribusiness, an organization, or even a boutique. Now, bookkeeping is very important in accounting because it helps an organization to keep record of what is bought, sold, owned or owed, what money comes in, and what goes out and what is left. Some of these information are gotten from a document called source document, which are recorded in journals. Now, we'll be talking about source document and journals, but first, let's start with source documents. A source document is a document in which the original business transactions are first recorded in before they are transferred to other financial journals or record. Now, a source document holds important information such as the names of the individuals involved in a business transaction, the amount of money paid, the date and items of transaction, and so on and so forth. Now, let's talk about the different types of source documents. That brings us to types of source documents. There are actually different types of source documents, but for this class, we'll be talking about just 8 of them. And they are invoice, debit notes, credit notes, return inward book, return outward book, receipt of payment, check, and lastly, bank statements. Now, let's talk about these different types of source documents one after the other. There are different types of source documents, and in this lesson, we're talking about 8 of them, and we are starting with invoice. An invoice is a document given to the buyer by the seller that contains details of all items bought by the buyer. Now, an invoice can be prepared by either the seller or the buyer. When the invoice is prepared by the seller, it is called sales invoice. Whereas when this invoice is prepared by the buyer, it is called purchase invoice. Next, we'll be talking about the debit note. A debit note is a document issued by a buyer to a seller informing the seller about the return of goods and the reason for such returns. This note shows the amount the seller owes the buyer. For example, I am the seller and you are the buyer. And let's say you came to my shop to buy 10 tubers of yam. And on getting home, you find out that 5 out of these 10 tubers of yam are bad. And you want to return them back to me. You have to issue a debit note to me, informing me the reason why you are returning those tubers of yam back to me and how much I'm to refund you. Now, for me to respond to that debit note, I have to issue you what they call credit note. And that takes us to the next one, which is credit note. A credit note is a document issued by a seller to a buyer to acknowledge that returned goods has been received. Now, when these returned goods are received by the seller will have to acknowledge that he has received this, and at the end, refund the money that is worth that goods that the buyer returned back to the seller. That brings us to the next one, return inward book. Now, from my example, on returning that goods back to the seller will need to do what? Record that goods that is returned back to him. And for him to do that, he needs to do it in a book called return inward book. Now, what is a return inward book? A return inward book is simply a registry whereby all returned goods are recorded in. From the farmer's perspective, all goods, or let's say the tubers of yam returned back to the farmer, is recorded inside that book, and the process is called return inward. Now let's go to the next one, which is return outward book. From my example, let's say the seller does not want to refund you the cost of those tubers of yam you returned back to him, but he wants to replace them with new tubers of yam. He will need to record them in a registry called return outward book. And the process of returning those new tubers of yam back to you is called return outward. The next is receipt of payment. Receipt of payment is a document issued by the seller to the buyer as proof of payment for services rendered or for goods that the buyer has bought from the seller. It also indicates if the payments were in full or in part. And let's move to the next one, check. A check is a document that instructs a bank to pay a certain amount of money from an individual's account to the person whose name is written on the check. The person instructing the bank to make the payment must have an account with the bank. What do I mean by this? Let's say I'm owing you some amount of money, or we engage in a business transaction and I want to pay you your money and I issue you a check. That check that I issue to you must bear your name, and you have to take it to the bank to cash that money. And for me to successfully issue you that check, I must have an account with that bank, and the amount of money which I want the bank to pay you must also be in my account with the bank. A bank statement is a document issued by a bank to its customer that summarizes the amount of money that goes in and out of a customer's account. It also shows the balance left in the customer's account. Having said this, let us now look at the different financial journals. But before we do that, let us know what a financial journal is. A financial journal is a record that contains detailed accounts of all financial transactions that takes place in a business or an organization. It is prepared using information gotten from the source document which we have discussed. Now, there are different types of financial journals, but for this lesson, we'll be talking about just 4 of them, and they are sales journals, purchase journals, cash receipt journals, and lastly, cash disbursement journals. Now, let's start with sales journals. A sales journal is used to keep record of all items sold by a business owner or an organization on credit. It helps the organization or the business owner to know the amount of money owed by the customer. That takes us to the next one, which is purchase journal. The next is purchase journal. Purchase journal is used by a company, an organization, or a business owner to keep record of all items that were bought on credit. It helps the business owner to keep track of all items or the money that they owe their customers. The next one is cash receipt journal. A cash receipt journal is used to record all goods paid for by a buyer at the time of purchase. It helps a business owner or an organization to keep record of money coming into the business or organization through sales of goods. Now, the cash receipt journal can be used to keep record of money that comes in either through check or by cash payment. And lastly, we're talking about cash disbursement journal. A cash disbursement journal is a detailed record of money paid out by a firm or an organization. These payments can be for services rendered to a business owner, tools, staff salary, livestock feeds, and so on and so forth. So let's say now you have a business that you're running or an organization, and you engage in some business transaction like payments of worker salary, buying of items, payment for fuel that you use in running your business, and so on and so forth. You record all those information in cash disbursement journal. Now, let's look at how we can prepare a sales journal and a purchase journal. From the board here, we have two cash receipts or invoices, and both invoices were issued by Okoro Farms. The following are the information that we need to prepare a sales journal. They include the account of the person to be debited, the invoice number, the date of sales, as well as the amount that is being debited. Also, on the second invoice, we have that same information, which is Lativa Hotels, as well as the date the transaction took place and the amount of money that was to be debited from Lativa's hotel. Now, this is what a sales journal looks like, and it is prepared by Okoro Farms. Now, those information that we talked about on the cash receipt as well as the invoice are recorded here in these columns. Now, let's fill them together. The first one was taken from Bedmark Eateries, and it was done on the 1st of August 2019. Now, the name of the account that the money will be debited from is what? Bedmark Eateries. The number on the invoice is A00102, and the number of this transaction on the sales journal is 1. The account receivable, or the account whereby the money will be paid into, is Okoro Farms. And the amount for the total goods is 77,750 naira only. Now, let's fill the sales journal with the second transaction information. The transaction was done on the 15th of August 2019, and the account to be debited is Lativa Hotel. The invoice number is A00103, and the number on the sales journal is 2. Now, the account receiving the money is Okoro Farm, and the total amount to be paid into the account is 154,450 naira. Now, this is how a sales journal is prepared. Now, let's look at how a purchase journal is prepared. Now, let us look at how we can prepare a purchase journal. Now, we can see that the purchase journal is prepared by Okoro Farms still. I want to get information from a cash receipt or invoice prepared by Nania Agro Limited and put them in purchase journal processed or arranged by Okoro Farms. Now, the same information that we got from the invoice for the sales journal is almost the same information that we want to get from this one. And from the board here, we can see the date that the transaction took place, which is 11th of August 2019. And we can just go on and fill the information like that. 11th of August 2019. And the name of the supplier is Nania Agro Limited. Since the space is not enough, we can just abbreviate it. And the invoice date is also the date of the transaction, which we can put here. And now the account of Nania Agro Limited can be written here under PT column. And the account receiving the money from Agro Farms Limited is still Nania Agro Limited. Now, from the items we have on the cash receipt or invoice here, we can see the price for the first item, which is 36,000 naira only. And the second item is 32,000 naira only. And the last item there is 82,000 naira only. Now, if we have more than one supplier, or let's say purchase we are done from more than one supplier, we can fill it here under this column. And the total sum of all the money is recorded here. Now, this is how you prepare a purchase journal. Now, let us look at the importance of bookkeeping to agriculture. From the beginning of our lesson, we've been talking about the different uses of bookkeeping. And bookkeeping is also important to agriculture. Why do we say this? Because it provides a basis for recording all financial activities. It makes it possible for the farm owner to monitor and control his or her expenses. It shows at the end of a financial year whether the business has recorded any profit or loss. And lastly, it serves as evidence of good management to banks, governments, and investors for procurement of loans, grants, or investment. Having said all this, we've come to the end of the lesson for today. But before we go, let's take a quick summary of what we've learned so far. We learned that bookkeeping is the practice of recording all financial transactions that takes place in a business. We've also learned that source documents are documents in which original business transactions are first recorded before they are transferred into journals. We also learned that some examples of source documents include sales invoice, debit note, credit note, receipt of payments, and so on. Also, we learned that a financial journal is a record that contains detailed account of all financial transactions of an organization or a firm. Next, we also discussed some examples of financial journals, which are sales, purchase, cash receipts, and cash disbursement journals. And lastly, we talked about some importance of bookkeeping to agriculture, which involves providing a means for recording all financial activities, monitor and control expenses, show financial progress, and so on. Before we go, let's take some questions to test our understanding of this topic. We'll be taking two questions. Question number 1, the practice of recording all financial transactions that take place in the farm or an agribusiness is called A, record keeping, B, bookkeeping, C, farm record, or D, sales journal. The answer is B, bookkeeping. Which of the following is not an example of a source document? A, invoice, B, debit notes, C, sales journals, or D, receipt of payment? The answer is C, sales journal. This will be all for now. I hope you can now define bookkeeping and prepare sales and purchase journals. See you in my next class. Bye for now.